typically you don't ever want to short oil and gold into the weekend because there's always potential geopolitical risk. If gold up, oil's up, and VIX is up on Friday, hug your wife and kick your dog, right? Because something's going to happen.
And good afternoon, everyone. I know you love our shows. Bok Kudla's back with me this month. We wanted to talk about rate cuts, topping the economy, what's going to happen with the gold and silver, Libya cutting oil production. You see in the world twisting and spinning, and where does it go from here? Because, I just joked with Bob when we got on. I was like, yeah, the world's still spinning, but definitely precariously closer to some sort of event that's going to reset our civilization here. So, Bob, I appreciate you joining me, and everybody out there, please leave your comments below. I read every one of those, try to respond to them, and then I use those questions to then bring forward to like this talk for an example. So everybody welcome, and Bob, floor's yours.
Yeah, so a lot of things have happened since the last time you and I spoke. So on Friday, we had the Jackson Hole meeting with the Federal Reserve, and he was extremely clear as to announcing rate cuts are now going to be the default setting now for the Fed. So the September meeting, September 17, 18, they're going to cut rates. We don't know if it's going to be 25 or 50 basis points. Before I tell you guys what that's going to mean going forward, let me tell you how we got here. So it all starts with COVID. So when we had the COVID crisis, we had a lot of liquidity and money coming into the system. The Fed cut interest rates. The government pumped trillions of dollars into the economy and the banking system. The Fed started to raise rates. Well, lo and behold, you guys noticed that they revised the employment numbers by 800,000 because of the birth-death model was overstated. Okay, now that happens sometimes before anybody gets too upset about them doing that. But the reason why it's happening, and it's probably not done yet, probably another 800,000 to 1 million more that are going to come off, is because of the fraud in the PPP area. So we had a PPP payout for companies, and the fraudsters just came out of the woodwork, created companies that didn't exist, created jobs that weren't there, created employees that aren't around, and none of this stuff was audited beforehand. And now it's all being audited, and so that they just probably close to $1 trillion in, well, not trillion, maybe $300 or $400 billion in fraud in this program. And it's just going to tie up these government watchdog agencies, the Department of Justice, the IRS, and all those guys are now trying to track this money down. What it did was it inflated the birth-death model because the system automatically assumes when you and I start a business, we get a federal ID. When that federal ID number is created, the system automatically assumes a certain amount of employees are going to be hired. And so they create a birth-death model. If it exceeds the amount of businesses that they expect to fail based on their econometric models, you get these pumps in employment. Well, everybody was relying on these pumps of employment to keep the interest rates high. And now we found out that they're just massively overstated. Now, you can indict the Fed. The Fed has 2,200 PhDs. They have all the same data. Why nobody saw this when you and I, Dave DuByne and Bok Kudla, have been telling you guys now for 2 years that they've been overstated. Why they don't know? Because we know they did know. It was policy to keep it restrictive. And the reason why they kept it restrictive, Dave, is because you and I were talking beforehand. Once they cut interest rates, the stock market has a 100% correlation to fall. So when rates rise, the market rises with rates. When rates rise, it goes the other way. So now the rates are going to fall. We're looking at an average of 31 to 34% down move. The great financial crisis, that sell-off was over 41%, from the rate cut, overall 47%. And so you have like a 2-3 weeks of euphoria, take you to the end of September, and then you have basically 100 weeks of a bear market. And so that's what we're looking at. And so a lot of people are front running this stuff now, Dave. So we had a huge market move on Friday. What's tempering the market is the unrest in the Middle East and the unrest in Japanese finance, and probably uncertainty about the crazy policies if the Democrats get into power in November. Some of the policies that they're recommending would literally put us into the Soviet Union. And so people are going to be really, really careful, with their money if they smell any of these things going sideways. And then speaking of sideways, Dave, we had Libya over the weekend having an internal fight, because they want to replace their central banker with somebody else, a warlord that runs the oil fields, so I'm shutting oil production. Ergo, $3 move like that. Now, can you imagine if Iran does something to Israel and Israel decides to pump a few missiles into the Carg Island terminal there? You're looking at oil up $100. And that's not out of the range of possibilities. Whether you like Israel or hate Israel, that's really irrelevant for our conversation. It's really action, reaction that all I care about. If Israel feels that they have an existential threat to their existence, they're going to make sure Iran feels the same pain. And they're going to make sure the world feels the same pain. And I'm sure right now Israel is probably talking to anybody who will listen and say, we will take out their oil fields and their ability to distribute oil. So you guys need to engage. That's probably why the U.S. parked another aircraft carrier over there and some Marines to basically dissuade Iran from doing something stupid, and then for Israel to go ahead and do something equally egregious, to the world economy. So that's what's out there. The other thing too, and before I stop my monologue here, is that we have Japan now is starting to deleverage their carry trade. And that's actually even more important to us because that carry trade, people have been relying on it for 14 years. And what a carry trade is that Japan's been devaluing their currencies now for the last decade and a half. And they take that money that they create out of thin air and they put it to use in higher yielding countries like Switzerland, the United States with stronger currencies. And they end up buying stocks in addition to bonds. And so when they unwind that thing, they obviously have to sell the assets they own so they can repatriate the loans they're taking against these currencies, Japanese currency, the yen, and you get a sell-off. We just had a sniff of that. We had a 10% move down, Dave, in the market. So if you fully unwind this thing, you're probably looking at another 10 or 15%, maybe even more. And so those are things that are facing the market. So you have political risk with these capital gains and these taxations on business. You have, geopolitical risk in Middle East, and you have international finance risk with Japan and the carry trade. And the thing that's driving the market here is that if we have lower cost of borrowing, we should be able to get some more speculation in there. So that's the yin yang right now.
Going to need some Alka-Seltzer with that. That's a lot to digest right there. And to put it out on the plate, I might go a little woo-woo right there, and he's talking about the build-up in the Middle East and everything. Perhaps that's the plan, because it would do so much economic damage that they could instantly bring in CBDCs without even blinking an eye. Just how they magically doubled the money supply on the planet during COVID without anybody blinking an eye, without anybody really saying, hey, what's going on? How's that? Well, we need... nobody asked questions at that time, and, people took advantage of it, and, the fraudsters sitting on a beach somewhere. But that oil thing is quite the, I was saying, before the talk here that, will OPEC ramp up production? Because, they pulled back on production. They're always in their quotas there. So if Libya cuts off oil production completely, and they are planning to go to zero slowly, they've warned everybody they are, would OPEC just pick it up and be like, all right, well, we can pump an extra 500,000 barrels between all the nations right now? But there is a beginning of a color revolution happening in Indonesia. If anybody's following, discerningly warning, we're seeing everything that you've ever seen play out, quote unquote, color revolution in play in Indonesia. Fingerprints from the bigs all over that everywhere. So if Indonesia were to also have some problems with oil production and Libya goes down, my question is, can these other oil producers pick it up, or would they even want to? Or is the ultimate plan to use this guise of chess pieces across a geopolitical board here to bring in the CBDCs because it was them, it was this policy, the oil, it was this, it was that. Though now you can see I have dual thoughts moving forward on everything we're seeing out here: distractive, narrative, or just plain planned.
Well, the problem with the CDBC, you just can't turn it on tomorrow. Okay, so there's a lot of infrastructure issues there. So I think there'll be a big fight with it, especially here in the U.S. But back to Indonesia for a second. Remember, gold, copper, and oil is Indonesia. So, just keep in mind that. And then there was another country was it Bangladesh, just had a revolution too, kicked out their leadership. So this is the fourth turning kind of stuff, and all we need now is a famine in some part of the world, and I think it really kicks things off. I mean, a lot of rain happening in a lot of different places. So,
yeah, Bob, I'll stop you there. That Bangladesh is having the largest record floods they've ever seen, even in parts of Sikkim. I'm covering this poor flights, dams collapsing across Sudan, dams are collapsing everywhere. It is truly borderline global flooding everywhere in every crop zone, except parts of the United States where they're experiencing drought. But I digress.
Well, we have the big rectangle, right? So where we have bad, we have good in this country.
Yeah.
So we're fortunate that way. But those are things I'm looking at, Dave. So, people want to trade with us. We're positioned for this trade. There's a great trade you take when they start cutting rates. We have that position. We talked about this before. We have these pair trades where you can go long and short a stock, and you basically act like a real estate broker and you pick up the yield between them two. And those have been doing really well. Those pair trades got us through that 10% correction, in the market with not even blinking. And, you're talking about distributions of the yields anywhere between, 40 and 80% annualized. So these are no joke. And so, come trade with us. You go, if you go to my site, tradelikeagenius.com, you have to tell me you came from Dave so you can get the appropriate discounts.
Or Bob, or trade with 2030.com direct.
Yeah,
trade with 2030.com.
That was my straight to you. So, but either way, just make sure. And a lot of people come to our site directly, but at least let us know they came from you, so that you can pick up you're supporting Dave by supporting me. So just remember that when you do this, and you get a great discount. In fact, his prices are better than mine now. So we make sure that we make it in your best interest to do this, support Dave. We all win together, help you make money on trades, help support Dave's channel, and obviously my business. So it's going to be really interesting times, guys. The way this thing works, absent of any of these black swans, usually we should be strong into the Fed meeting. We should get a sell-off into October. And then before the election day, you usually get a ramp up. And then it depends on who's going to win the election. If the Democrats sweep, we'd probably go into a market crash immediately. Okay. If the Republicans sweep, we'll probably have all-time highs. And if it's a mixed bag, then we're just going to go with seasonality, but we'll be going into a recession. What I mean by a mixed bag is if the Republicans hold or keep the Senate, or not keep the Senate, but win the Senate, and they hold the House, and Kamala gets in, she's immediately a lame duck. Okay, they won't approve anything she does, and the only thing that can happen to us is all downside stuff. That's a distinct possibility that the Republicans will hold the House and take the Senate. It all depends on how these 5 cities work, depending if the Democrats can take the election. Remember, there's not a referendum of the whole country. There's 5 areas of the country that matter. You're talking about Phoenix Metro, Detroit Metro, Milwaukee Metro, Atlanta Metro, and Philly Metro. Those are going to determine the election. So That's what we're looking at. So even though we can have a pumpkin run as president and as Democrat, if they can get their machine out there and get people to vote for a pumpkin, the pumpkin's going to win the election. So that's kind of where we are. That's how tight and divided our country is right now.
And you can see that kind of happening across the globe. I don't know what it is, but it seems to be the copy paste of human perception across the planet. Everything has gone to the black and white. There's no middle any longer. There's no gray areas. It is A or B. And, people are trying to protect their wealth. So we got, record high gold prices. Silver just hit all-time record high. If you're pricing it in Australian dollars, not U.S. dollars. So we're, coming into the world seeing that something just isn't right. And whatever is going to occur in the United States or other elections across the world, this is a big election year for the planet. People really want to protect themselves. So, how high could something like this go? Because we saw the sell-off. Bitcoin crashed during that sell-off. So a lot of people are just scratching their heads saying, maybe it's not a safe thing of investment. I know it'll bounce back when the markets bounce back, but if we come into some sort of global contagion or something, is that the moneymaker signaling for you to sell? Or
oh yeah, you hear my some sort of alert went off. I'm not looking, so I don't know. But yeah,
we got him with the blinders. He won't even look.
Bitcoin is interesting because Bitcoin is really acting like a leverage QQQ trade at the moment. Once it sheds that and goes to a safe haven, then things will change. But gold on Friday we had gold up, oil up, market up, Bitcoin up, and so today basically gold's up and oil's up, Bitcoin's down, market's down. So that's kind of how Bitcoin's acting right now. It's acting as kind of a liquidity barometer, whereas gold and oil are acting as safe havens.
Yeah, so let me hit you up with that. Now, you were saying something like when gold and oil are up on a Friday, there's some sort of geopolitical event or some sort of event that's happening on the weekend. But then you were saying also when gold and oil are up on a Monday, then what happens when it's green on Monday?
Yeah, I usually get follow through. There's ongoing tension here, so people don't think it's episodic. Typically, you don't ever want to short oil and gold into the weekend because there's always potential geopolitical risk, right? And so, but we had gold up, oil up, and VIX was down, but we had gold up, oil up. If gold up, oil's up, and VIX is up on Friday, hug your wife and kick your dog, right? Because something's going to happen. But we had a follow through because we had the event, right? We had the Israel-Lebanon event over the weekend, then we had the Libya event. And so, we have follow through now. Oil's maintaining its strength because Libya was a marginal producer. So now we're running deficit. The drawdowns have been intense too. So you have drawdowns of inventory in the country. And so usually in September, oil really sells off. And now they're trying to draw the inventory down so that when the glut of oil comes in, they're not overpaying for it. Well, now this is happening. It's forcing people to buy into the panic versus selling into it. So it's going to be really interesting to see. Look, my view has not changed one iota, and I've been consistent here with you guys. I loved energy. I stay with energy. I don't think energy is going anywhere. Geopolitics is going to trump recession on this. And gold is going to be because the people in power are going to throw any kind of dollars they can to maintain their power. And gold is going to be good. And eventually Bitcoin is going to be good because it's going to affect the currency. Bitcoin doesn't like a stronger dollar. So we're going to have to get more liquidity in the system for it to be able to overcome that. But technology is in trouble. I think we have the NVIDIA earnings on Wednesday. It's going to be telltale. But when this market rolls over, it's going to be led by tech. And guess what? Those high yield products now have a short tech product out there. So you can make money as the market falls and pick up a big dividend while you wait.
Because you follow a lot of tech news too. Speaking of tech, you kind of jarred a thought loose on me. Okay, so Samsung comes out and says they have this new revolutionary battery that can charge in 9 minutes, but it requires 1 kilogram of silver, or approximately 32.5 ounces per battery. Now, do you think there's some validity behind this, and will this have some future driving price of silver? And could silver actually exceed the gold gains if gold's not, well, they say 40% on the unit to revalue part of the world's debt on that. So walk me through, is silver just based on the new battery utilization possibility? And I'm just saying possibility. Is that
Yeah,
something
I
or?
think it's absolutely going to happen. That Samsung is a game changer. And remember, the gold silver ratio is out of whack. So
Hmm.
silver can double, triple, quadruple, and just get back into its old ratio.
Yeah.
And silver is unlike gold. You can actually lose silver out into the ether because it goes into production and gets stuck in places, right? Like solar panels. So where gold, very little of it's used for industrial. Mostly it's cosmetic or for currency and for store of value. So yeah, I think so. I mean, I own silver right now. I don't own physical silver. I own the silver miners. I have very little physical silver. I like to monetize everything I own. So Hecla's the best choice for me because it's in the United States. But there's a number of choices you can take with New Mexican silver companies. The only downside to all that is that governments may get greedy and amp up their royalties. Where the United States and Canada, they really can't because they're not really beholden that way to the government.
So what happens if the oil gets cut off in the Middle East? Then how does that affect the miners? Do they just pass the cost on and everything just shoots up in price and people still pay it, or would there be sort of a demand destruction because of silver, for example? I'm just saying, for example, it goes to like $400 or $500 an ounce because of inability to mine or deficit in supply. I mean, what's that going to do? I
These
mean, just
guys,
walk me through the oil
yeah,
get cut off through the mining
yeah, these
sector.
guys they're in the futures markets. So any miner that has a half a brain in their head, they've locked in. They're probably locked in oil prices 2 years out. Okay, so they bought future contracts. So if the oil they're buying on the spot to run their machines go up, their future their future contract that they own is mitigating that. Okay, and they can always cash it in whatever they think they need to.
Could it go to
So
cash
that's the other thing.
settlement though, where they're forced to cash settle versus taking physical delivery?
Oh, they won't take physical; they'll cash settle
They will. Okay.
because where are they going to store it? So
Unless they're going to use
okay,
it, that would be,
yeah, they're gonna. Well, they just cash settle and buy the oil.
or the
They'll do it
refined
all in one
product,
shot.
or the refined product that they need.
Yeah, so I mean, look, they can write a contract with ExxonMobil, right? You buy a futures contract, you go to ExxonMobil, say I want to buy X amount of thousands of barrels of, what would be gallons of gasoline from you or diesel from you, to be delivered over the next 2 years. That's what they're doing. Or they go to a jobber and do the same thing that's buying from those guys. So that's all happening. Those are all like simultaneous trades. They don't need to settle in the metal in the physical at all because they probably have contracts for delivery from somebody else.
Yeah, because I was just trying to walk down. Okay, so this oil thing, because it does seem like there's a lot of tension. Russia just going off the Richter this morning, just smashing anything and everything across the Ukraine that was like fabrication related, staging related, and they're just still going whole hog there on the Telegram feeds. Just see how many new locations are just getting ripped apart right now in real time. I mean, I think they're, and so you can see this escalating is what I'm saying. It just seems like there's more tension every single week. Assets are in play now, and it just takes one slip up. So what are the most volatile? So if oil does get cut, so this is a kind of a wild card question. If oil, something were to happen to it, and we saw these embargoes, it rolls up another $150 a barrel. What are the industries that are most vulnerable to that?
Transportation, right?
Yeah.
Trucking companies, companies, the airlines. Uranium miners will do really well. Obviously the oil companies will do well. The midstream companies, the ones that convert the oil into other products, are going to do well.
Hmm.
Um, Initially, they'll do poorly, but they're probably already hedged out their. Those guys are already hedged out their prices, so they won't see it. So yeah, so anybody that consumes oil is going to get hammered. Anybody that refines and produces it, we're going to do well. So that's the way it is. Look, I own ExxonMobil, we own Oxy, Canadian National, Devon Energy, all in the portfolio. So they're all going to do just fine.
Yeah, because Bob, you got 10 fingers, you got 10 pulses. You get to the finger on the pulse. Bob's got all 10 on all 10 pulses out there. His hands are just pulsing. Seriously though, to take a look at what they keep track of every day is just mind-boggling in itself, of sectors, companies, and then how to trade and move within those to balance them, short them, go long, just seeing what's happening during the day. Again, tradewith2030.com. I'll let you expand on that thought there. Yeah, because we
So
spoke
this
last
is
time, said we're going to roll through some of the charts here, and I actually can see, because I use the same software for trading as well, but it's, on the crypto side, not oil.
yeah. So guys,
And
this
my
is my
coloration set up a bit different for psychologicals as well, because that red and green scares you to death. I always go like yellow black, like a bumblebee. Bzz.
so here's oil 4 hours. So here's my algorithm, right? And when you talk about 10 toes, I let the algorithm do the work. So we have a situation here where, see this line here? This is telling us that's a resistance area for oil on the 4 hour. This is one of our algorithms. Basically, this algorithm says you're counter trend trading until it flips. Okay. This algorithm here, when you see these color changes like this, it's telling you that right here is a buy, right? So you see the pop here. Okay. That pop faded. So you wouldn't have really made any money on that trade. Okay, that happens because you're never 100% on your trades. And then you came back, we got this sell off, right? So here's the selling happened, right? So it came down, and then we got another oversold area here, and then the algorithm picked up again here. You would have bought oil here at $72.21, okay? And it's been running ever since. So if you had a futures contract on, you made $5 of oil on a contract. You probably made your month in this by being in the trade with our algorithm. Algorithm is now overbought right now, but that means nothing. Okay, oversold is more important than overbought. Okay, our algorithm is now neutral on this, but we broke our Ranger algorithm, and this is your line now that you're long. You want to look at this line here, and that's your sell area. Okay, so if you're trading this thing now on like a 4 hour chart, $75.24 is your stop out. Okay. And you just ignore this at this point because it went neutral. But if this thing dips down and you get another buy again, we're going to make another move up higher. Gold did the same thing last week. You got a buy signal right here. You got a pop momentum. See the shaded area, momentum says bullish. There's another big move. These are futures contracts. These are big leverage moves. Okay, so MicroStrategy is one that we've been in. Okay, it was consolidating. We don't trade this on the 4 hour. We trade this on the 15-minute. And look at this move that it did on Friday. Okay, it came down, it gapped up. We got a buy signal, and this thing drove all the way up to 150. I went from 131 to 150. Okay, 19-point move in this thing. I mean, that's the double-digit, unheard of kind of moves. And so it got up here, we took profit at top of the range. So these are the trades that we call out for people all the time. And we give the attaboys. And then I'm always screening my trades here. I got another filter running right here.
Yeah, we discussed those yield
have,
max products a couple of times, and I'm quite interested in that too, how you can
they're awesome.
defend yourself either direction.
I'll show you these things in a second. They're just simply amazing. And so I got all my momentum signals are here because I could filter on telecharts. I can't really filter on TradingView. So I'm looking for opportunities all the time. So it's going to be dinging me like you just heard, telling you, hey, there's a trade here, there's a trade here, there's a trade here. And then we'll go back to here to show you these yield max products. You have, let's go into like Misty. So you got Misty here. I'm going to go on a daily on this thing. This is the MicroStrategy derivative. So it's $25, right? So last month, it paid $1.94 dividend on a $25 stock. They pay them monthly. So MicroStrategy is running at close to 100% dividend distributions. Look at the month before, $3. The month before, $2.50. The month before, $4. So if you buy these things, you're getting your money back in a year. Then if you're worried that, hey, this thing may drop because Bitcoin may drop, well, fiat is the inverse of Coinbase. Well, Coinbase Coinbase will fall if Bitcoin falls, which then could hedge MicroStrategies. And so it's a $19 stock here, and it paid a dividend of $1.82 last month. Okay, so you pair these two together, Dave, you're essentially protecting your principal, and you're picking up these massive, massive dividends every month. And so we went ahead and we biased these trades. So are we long biased? Are we short biased? Like, are we 70-30? Are we 30-70? Are we 50-50? And then that's what I watch for our subscribers, and I give them my opinion on that. And then people can adjust accordingly. You can reinvest these dividends if you want, or you can take the cash. I do both, depending on what it is. And it really smooths down the portfolio. And so we help people do this. And, you know, the amount of money you pay for our service is nothing. Your first month of these distributions that we help you do already paid for a year of the service. Plus, we put out trades every day. We got people in ExxonMobil at 115, moving up to stop. We got people in Oxy last week in anticipation. We got people in Cleveland Cliffs. This trade here, we got people in Cleveland Cliffs. You know, we bought this low right here, okay? And when it hit algorithm here and our worm turned, so we got in here, and look, we're running up right now. We're running up high on Cleveland Cliffs, coming up on my target price here, and we just keep moving the stop up every day. So that's how we do it. And so I'm watching this stuff every day, Dave.
Yeah, that's why I said fingers on the pulse, like all 10 fingers on the pulse. You know, you got others out there running with you on that too, sharing information and following.
Yep. And when we do it for crypto and we do it for option trading, you can pick what room you want to pick. And like I said, we're doing this a long time. Dave and I have been doing this together for 10 years. I've been doing it since Dave had hair, guys. That's how long we've been doing it together. I don't think so. I think you've always had it shaved. So
I gotta give you some old pictures from my university days. Wild style.
You probably had like the Peter Frampton do, you know.
And a mullet, bro. I needed both.
Peter Frampton had this huge hair. Now he's bald. It's pretty funny. But yeah, so guys, you know, come trade with us. You know, this is gonna be fun times. I mean, scary times if you're not prepared. Fun times if you're prepared. So we'll help you definitely get prepared.
Again, Tradle2030.com. Come over, check it out.
Take advantage of the discounts. They close over the weekend.
Keep your powder dry so you can execute on some of these trades, because this is dynastic wealth being generated during this once in literally a multi-generation turning right now. So you're gonna have to wait another 100 years or, you know, several hundred years to get this opportunity again. So don't squander it and enjoy the rest of your life after you execute on it.
Well, have a good one, my friend.
All right, bye for now.
It's unknown if early man knew they would be the progenitors of great civilizations, or if they knew when their empires would fall and disappear into history. Fortunately for us as modern man, we can recognize that we are at the precipice, a point in history where we can see the cycle changing. Where we go from here is up to us.
Pro Clear Cleanse is the most powerful spray cleaner on the market today. No elbow grease necessary. Pro Clear Cleanse cuts through grease and grime like a chef's knife. Finally, the one cleaner that can do it all. Powerful surfactant cleaning technology cleans ovens, glass, porcelain, even polished wood. Environmentally friendly, less packaging and waste with no harsh smells, pet safe, child safe. 5 tablets equals 1 bottle of traditional cleaner. It's 5 months of cleaning for a fraction of the cost. Behold the grease-erasing power of Odor Crush. Simply drop a tablet into your bottle of warm water and shake it so it is evenly diluted. Spray the surface you want cleaned. Let set longer for tougher grease. Take a paper towel or a reusable cloth and wipe. Done and done. One of the best things about Pro Clear Cleanse, it's you can take it anywhere. Hiking, camping, or on vacation. Without having to buy or bring cleaner, you can store the same potential in the tablets, then just add water and bam, you have a bottle of cleaner. Order now and make life a little easier and cleaner.